The narrative that markets are rigged and that big institutions steal from little girls and guys out there is mostly not correct. That narrative exploits fear and reduces rich complexity to a simple fairy tale. Find a victim, finger a villain, promote a hero. We don't live in Sherwood Forest. Our markets are well structured, highly competitive, and expertly regulated. There's plenty of room for improvement, no doubt, particularly as we adapt to an ever-changing world. One needed improvement is to deliver institutional-grade capabilities to retail investors, including in the areas of data, knowledge, access, and influence. And that's our mission at all of us. After looking at market issues from all these angles, I found that no one was properly solving a critically important problem, which is leveling the playing field for retail investors. Retail investors don't have the same tools as large institutions and underperform the broader markets over time. I decided to apply my experience to try to address this critical societal need. The problem with commissions in their former implementation is that they also had the same misalignment issues of trying to promote more trading in order, more trading correlated with higher revenues for brokers before there was any payment for order flow. So this highlighting of payment for order flow as having that misalignment issue is really not any different from what the state was before payment for order flow in terms of that aspect. The things that worry me about reinstituting those commissions are that there's two things that are less optimal about fixed commissions. One is that they don't reflect the true economic value of the underlying trade. So if a large trade and a small trade are both build the same fee, that is not an economically sound approach. Secondly, I believe fractional shares, which haven't gotten a lot of discussion here, are extremely important and valuable to retail investors. We talk about giving smaller investors access to markets, but we have securities that trade at very high prices. How do we expect those investors to be able to buy an Amazon or another high-priced stock? And one way that we can do that is we can offer fractional shares, and we do. And we, as an industry, we've made great strides there. That also allows a retail investor, even with a small portfolio, to rebalance it in ways that are optimal. And so I also worry whether fractional shares would become uneconomical if we removed payment for order flow.
Interesting. Mr. Pivovar.
Let me be clear that we currently are paid for order flow at all of us. And because we believe in radical transparency and alignment, unlike some other brokers, we share this revenue with our customers. We believe this aligns our interests with our customers and helps educate them about how markets work. Some view disclosure as a point-in-time regulatory requirement. We take the view that transparency is a real-time foundation for our entire business. PFOF is not a necessary component of our market structure, but it is an effective way for markets to operate and should not be banned without careful consideration of its costs and benefits. Importantly, regulation requires all market makers to trade with customers at or better than best prices available on exchanges. And there's a comprehensive execution audit trail for brokers and regulators to monitor. In terms of gamification and social investing, social media platforms and gamification are powerful forces, and like most implements, can be used for both good and bad purposes. But society is evolving, and younger generations want products and services delivered via social media. Good gamification and social investing can drive financial literacy, education, and encourage healthy behavior, such as regular saving and investing. And that is a standard we hold ourselves to at all of us. Brokerage is highly competitive, and innovations in social investing will continue to emerge. The right regulatory balance is to encourage innovation for the benefit of retail investors while ensuring investor protection. Our markets can be a wonderful means for Americans to invest and build wealth. But as the GameStop activity shows, our markets can be improved. And efforts to educate and improve experience of retail investors are critical as markets become increasingly accessible and more people invest for the first time. I appreciate this opportunity to appear before the committee today. I look forward to answering your questions from an entrepreneurial perspective at the appropriate time.